Petty cash by Christopher Johnson. Petty cash is used in instances where only a minor amount of cash is needed to pay for minor expenses, where a large cheque is not needed. An example of this could be office equipment, such as pens or staplers, but are required so the business can conduct its day-to-day activities. A petty cash fund is created by the business where an amount of cash is kept easily on hand for minor business expenditures to be used by the staff. Now that we understand what petty cash is, let's take a look as to what exactly is involved in creating a petty cash fund. The first step is to establish the fund, then make payments from the fund, and then finally replenish the fund. Firstly, the petty cash fund must be established. In order for this, imagine a company wrote a $100 cheque and cashed it to establish a competitive cash fund, then proceeded to give it to an employee who will be considered the custodian. An initial entry will then be made into the journal to assign the value of the fund. Petty cash is debited and cash is credited, leading to no change in assets. Cash has simply been assigned as petty cash by the company to make it easy on hand. Making payments usually occurs in two ways. Cash taken from the fund to make payments, or employees can seek reimbursement from the fund after spending their own money on these minor expenditures. The custodian should make absolutely sure that receipts are collected as no journal entries are being made. But how are purchases recorded by the business, or what happens if funds are low? Well, this is when replenishing funds comes into play, where a petty cash fund replenishment report is used to calculate the amount required to return the balance back to the original amount, in addition to total receipts. To do this, the company will cash a cheque for the amount to bring the total cash fund back to the original balance. For example, in a cash account of $100, less remaining cash in the fund is $15, and required cash to replenish the account is $85. Calculated receipts should then equal required amount to replenish the fund. This means that a cheque of $85 should be cashed and recorded in the journal entry. This debits all expenses accounts and credits the cash account. However, it is also very common for there to be discrepancies with required replenishment amounts and receipts due to incorrect change or improper collection of receipts by the custodian. This is when the business would apply the temporary expense account cash over and short comes into play. In this situation, this discrepancy is charged and the account can either have a credit or debit balance depending on the circumstance, whether the amount be less or over the amount needed to return the balance back to the original amount. This has been a short video on the petty cash fund. Thank you for listening.